there are certain things that we see over and over again. The great thing about a fractional CFO is that we start seeing patterns, and we start seeing patterns of what works also. So the patterns that we see of what a lot of people do is, the first one is what you had mentioned: profit does not equal cash. I have $500,000 in profit. I've got 50,000 in my bank account. I don't know where it went. So that is the number one question. Usually because it's something happening on the balance sheet, or maybe they're just taking a lot of distributions and they don't really realize that happens too. So old credit card
debt. They don't really realize they're taking distributions?
I've had that happen. This is all true stories from experience.
Hey folks, Drew Aldridge here, President, Mobilization Funding. We're here for another episode of the Mobilization Mindset. Today, I am really pumped up to have Natalia Zacharin from Zacharin Consulting, a CFO, outsourcing financial services firm. She knows everything financial services, back office, how to run your business. From a bookkeeping, from a strategic services, forecasting, all that type stuff. So we're really, really pumped to have her here. Natalia, what's going on? How are you?
Hey, Drew. So happy to be here. Excited to chat with you today.
Awesome. Did I get some of those services right? I know we're going to dig in, but was I on the right track?
You were definitely on the right track.
Awesome. But anyway, so as you guys know out there, we are really hyper focused on the construction industry, and Natalia is uniquely positioned to really kind of talk about some of the issues and challenges in the construction industry as it relates to managing your finances, managing your books. So Natalia, I want to start off by asking just really a simple question. What is sort of like an outsourced CFO or CFO consultant? Like, just based, to the most basic concepts of it.
Sure. So the way I like to look at it is bookkeeping is present or historical data, and the CFO looks at all of that information and actually builds out models and projections to look forward. So we're always talking about where are we right now, but where do we want to go, and are we headed in that direction?
Makes total sense. And we have a ton of clients that use services that are similar. And probably a lot of prospects and clients that probably need your services as well, because they're doing it in-house. So that kind of brings me to my next question. Let's pretend I'm a business owner of a specialty contractor. I'm growing. At what point do I kind of take that out of out of having a family member do it, or maybe me doing it myself, and start considering hiring a CFO or hiring someone like yourself? Kind of think about that decision tree. Walk through that with me.
Sure. So I think for bookkeeping, bookkeeping is the foundation of your decision making in the business. And I wouldn't trust a family member or myself if that wasn't what I did to do it. I would say that hire a very good bookkeeper as soon as possible, because that's going to be one of your most important hires to have accurate data. Now, a CFO is going to be someone that if you're scaling, growing, you have you want to hire, you've got job costing, you've got all this complexity going on. You don't know where your cash is going, because now you've got vehicles and equipment and loans and like so many different pieces going on. So typically, people hire fractional CFO when they're about at $1 million in gross revenue. However, if you're really scaling and growing rather quickly, we do see people hiring us a lot sooner. And then we have people hiring us up until like the $30 million range, because technically after $10 million, you should be hiring that position in-house. You should now have like your in-house financial department. But I think that what I'm finding is that people are having trouble finding the right people, and we've perfected recruiting people in the financial industry. So now they are outsourcing at a much higher level just to have a fractional CFO.
Yeah, no, that's awesome. So you're saying, I just want to confirm I understand. Let's say I'm $1 million company. I probably have a bookkeeper internally, or maybe I'm keeping those books myself. But are you saying I should have that bookkeeper internally, or do you think I should outsource it to a firm like yourself to outsource that, to take that off my plate? What is kind of your thought process on that?
That really depends on how good the bookkeeper is. Now, there's going to be functions, especially in construction, that someone internally needs to do. It's not going to make sense for someone externally. For instance, Invoicing could be very complicated. Someone
Mhm.
that's fractional, that's, that doesn't work at a day to day in your company is not going to really understand the nuances, the timing, and all the different variations of what's going to happen in invoicing. So you're probably going to need someone in the financial space to
Mhm.
do, pay your bills, create the projects, estimates, like all the, and invoice those. The bookkeeping can be done either fractionally or with the same person, as long as they know what they're doing. They're doing it well and it's on time. And when I mean on
Mhm.
time, I don't mean it was like here we're actually now recording in February. If they're saying, hey, we just finished up December, that's not on time.
Mhm.
That's
Mhm.
already behind. So as long
Mhm.
as it's timely and accurate, it doesn't matter where you're getting your bookkeeping from.
Awesome. So I'm hearing timely and accurate. That those are the core value drivers of a bookkeeper. So when you're considering a bookkeeper, and I'm gonna go up the ladder, of the types of positions in the financial back office, but I'm honing in on bookkeeping right now. I'm new to the finance world. I'm a business owner. I know how to do my trade. What exactly does a bookkeeper do? And I know I'm asking the most basic questions, but like you're telling timely manner, accurate, but on what inputs, right?
Perfect. I love the questions, and nothing is too basic. And I love bookkeeping because it's really important. Like I said, it's the foundation, the most important piece. So, bookkeeping is recording every transaction that goes through your bank account or your credit cards.
Hmm.
So, if you are, you have like usually through your credit cards, you can have a lot of expenses going through there. They want to record them with the vendor name, the correct category, and maybe even the correct project or the job that it's
Hmm.
that it goes to, and the amount, and then recording payroll correctly, recording principal and interest on loans. When you buy a new asset, recording that correctly, that's really important because the assets and the liabilities have will really impact your tax liability and your decision
Hmm.
making also. So just recording things and then reconciling. Sorry, I have a visitor.
No, no, no. Hey, have her join. This is
she
great.
she loves podcasts.
Nice.
um, so having them reconcile is really, really important as well. That means that's just a fancy way of saying that we're going to take all the information that we have in your accounting software, and we usually use QuickBooks Online. That's the one that we recommend. For most situations, and then taking the statements and making sure that they all match up, that there's no duplicates, that there's no transactions missing, and so if it's not reconciled, there could be an issue. So that's bookkeeping, recording everything, putting it all in the correct buckets, and then
Hmm.
reconciling it, which is a way to confirm that that is accurate.
That makes sense. That outline was so helpful. So all of that, all of those monthly or daily bookkeeping activities eventually flow onto the balance sheet and income statement.
Yes, exactly.
Perfect.
And so a good bookkeeper will know how to understand and how to read the financials. That's
Uh-huh.
really, really important because everything that you do on the bookkeeping side will impact the financials. So if you don't know how to read them as a bookkeeper, you're doing yourself a disservice
Hmm.
because you're not going to know when you make a mistake, and we all make mistakes. So this is
Hmm.
a way for, like, if you read the financials, this is a way for you to know to be able to self-review and make sure that it's accurate.
Yeah. And guys, the just for the viewers out there, the importance of this is the more you know in real time, the more you can adapt and overcome challenges that you might have. So knowledge is complete power. You don't want
Mhm.
to get to the end of the year not having conducted the bookkeeping monthly, daily bookkeeping activities properly, and then you get to the end of the year and you have a massive surprise.
Yes.
Secondly, folks, if you're not adequately managing bookkeeping and executing that well, you're not going to know your cash flow. You're not going to know the expenses that you've actually paid. You're not really going to know exactly how profitable your jobs or your company is. So I mean, I know we're at the foundation, folks, but you've got to start at the basics to really move the needle on growing your company. Okay.
Yeah.
Sorry, Natalia. I just wanted to make some notes there.
Yeah,
So,
yeah. Can I add something to
yeah,
that?
yeah.
Because this is so important. We have about 8 to 10 new clients almost every week. So
Hmm.
we can see what's happening outside of our own organization. They come about 90% come in with really bad bookkeeping or none at all or very
Hmm.
behind. So this is something that's happening all the time. People are considering bookkeeping data entry. It's not. It's an extremely valuable, the biggest piece of information that you need to make all other decisions. So
Hmm.
don't. So you should take it seriously. And the reason I don't like the owner doing it is because it gets behind the owner. That's not the owner's job. The owner's job is
Hmm.
to drive revenue,
Hmm.
culture, higher scale.
Hmm.
So just wanted to put that out there as well.
You're exactly right. I mean, you're hitting the nail on the head. I mean, the last thing you want the owner to do is uh, something where he or she is not being the most useful for the company, and finding someone who will be much more useful
Yes.
at that particular function is critical to building that sort of back end infrastructure. Okay, let's move on. All right, so we got bookkeeping. Check. We understand that. So next you have sort of that controller role, right? You go from bookkeeping to sort of junior accountant controller level. What role does that person play within a company or as a service with your company?
Sure. So the controller, we actually have an automatic controller done for, it's not automated, it's a person, but we include that in every single bookkeeping that we do for every single client because it's very important. So the controller oversees all of the financial functions and they verify that it's all correct. The controller also will be there if you have some really complicated things. So if you have a lot of intercompany transactions, multiple companies, a lot of projects, a lot of jobs. So the more complicated you are, the less the bookkeeper will be able to really understand and keep up with some of the complexity because that's not their job.
Hmm.
And so the higher level, now we're talking bookkeeper is going to be for full-time bookkeeper anywhere from like 50,000 to about 70,000, 80,000, depending on their level of expertise and where
You're
they are
talking
in the country.
in-house. You're talking
In-house,
in-house? Okay,
yes,
got it. Got it.
full-time salary. A controller will probably start at 80 and go to about 90, 95,000. So they are a higher level. They're like
Hmm.
the next step up. And that's really someone that can understand the financials, can read them. They don't really analyze them as much. They do somewhat, just enough to understand the technical accuracy of them. So they're
Hmm.
technical specialists.
Got it. Got it. So they kind of see the forest through the trees. The bookkeeper's kind of laser focused on the data, laser focused on the operational components of maintaining and memorializing that data. And then the controller comes in, sees the whole company, everything that's going on, makes sure it's all consolidated properly, reconciled properly at the end of each month, and sort of is the manager of that whole process.
Yes, they can be the manager or the lead,
Hmm.
depending if there isn't isn't a higher level.
Hmm.
Now, one thing to notice is that just because someone's really good at their job doesn't mean they're a good manager. So you
Oh
have
no,
to
yeah.
consider that too.
No, that makes total sense. No, that's definitely makes sense. Okay, so we talked about bookkeeping. We've talked about kind of that controller role. Now let's kind of move up to that CFO role, right? What are the core functionalities of that CFO role? What are the things that they're focusing on, and what is the value that they're driving to?
Yes, so the CFO is going to be focusing now on all of this data. They're going to put together even more information. So they're going to take the data out of your accounting system and build more models, projections, forecasts, budgets, graphs. We love to do graphs because graphs do something different to your brain and your decision
Hmm.
making than just black and white numbers.
Hmm.
And everything in finance is trend, so that's really important. Then they take ratios and fractions of numbers, and they can tell certain metrics, KPIs, right? Key performance indicators, like what's important for that business. So there's some universal metrics that are looking at revenue, profit,
Hmm.
cash, probably payroll to revenue or labor to revenue ratios. They'll look at cost of client acquisition. They'll look at profitability per project or job. And what they're looking at is here we are right now. And if our profitability or our cash is low or something is not where we want it to be, or let's say we're at 2 million and we want to get to 4 million next year, we're going to plan that out every single month, a little by little, taking into account any kind of seasonality or anything that we know, like if you know some kind of job is coming in or you're going to lose something. Um,
Hmm.
Building that out and then looking at the projections, the actuals, and looking at the variance. And that's really important because if you didn't meet your projections, why? And that's when you can make decisions and you can
Hmm.
see problems 6 months in advance. So now you have time. You have time to pivot. You have time to do something a little bit differently. So that's what the CFO does. They drive the business forward. They're more of a, they're not the visionary because the CEO is the visionary, but they are a visionary type of personality because they're always looking ahead.
Yeah, no, that's such a good outline and such a great review of the kind of whole finance. And I know there's other financial functions, but those are the three that we're going to focus on today. Okay,
Mhm.
so we've been talking mostly about companies having these positions in-house, and there's one other question, that I want to ask about that, but then we're going to kind of shift over to what it means to outsource a lot of this stuff and why. But my last question on this note is what is the ideal cadence and what does a relationship between a founder and their CFO really look like? And what information should the CEO be holding that CFO accountable for from information gathering standpoint, and then on what cadence? Can you talk a little bit about that?
Sure. So if they, and the cadence is going to be different if they're in-house or if they're fractional. And then the great thing about fractional is that now that people that aren't at like 20 million in revenue can afford that same type of analysis and help and assistance at like 500,000. So
Hmm.
that's the difference between having someone in-house who's a full-time position because that's like a 200, 250,000, maybe even more salaried position.
Hmm.
So what should the CFO do? They need to, they're looking at first of all, they're making sure that all of the financial functions are running, right? So that, accounts receivables, which is invoicing, that's being done timely, that collections are being done, all the money is coming in as quickly as possible, invoicing, so the velocity of money is just as important as how much. So
Hmm.
they're keeping track of that. They're keeping track of expenses. Now, maybe if because they're looking at cash flow. Cash flow is the definition of cash flow is money in compared to money going out. That's it.
Hmm.
It has nothing to do with how much cash you have in the bank. It has nothing to do with how much profit you have coming in. It has
Hmm.
literally to do with how much cash is coming in and how much is going out. So they're protecting your cash flow by making
Yeah.
sure that you're not, that maybe you had a big client that is late paying and you have a big invoice or bill that's due, making sure that you're not in trouble by paying that bill before that
Hmm.
money comes in. So they're looking at that. So they're making sure all the functions are working out correctly. That's what a day-to-day full-time person should be doing. They're also looking at, like, if you have loans, they're talking to the bank, they're helping with the loan documentation, they're talking to all of the other financial people. Maybe you have a 401k, maybe you have benefits for your employees, insurance. So anything that has to do with money is who they're
Hmm.
talking to and who they are advocating for your company to get the best deals and the best quality of all of those things.
That makes total sense. And you made a really important point that I say on about every podcast
Mhm.
because I cannot reiterate this point more that profit does not equal cash.
Oh, I love
Profit
that.
does not equal cash.
Yes.
And I say that on every podcast. I know the listeners are probably rolling their eyes but I just cannot hammer that point home enough because we see so many companies, Natalia, that are growing at lightning speed, but they feel the constraint of cash. Where is my cash? I've gone from 5 million to $8 million in revenue from last year to this year. I'm not generating cash, and we don't have to get into that now, but and I'm profitable. I'm
Mhm.
doing profitable work, but that does not equal cash. Cash is dependent solely on your payment terms from your customer, your payment terms to your vendors, how well you manage your overhead expenses, and certainly has a lot to do with how profitable you are in business. But because that's just gonna when that comes in as cash, it's just gonna generate more cash. But it's just a whole ecosystem, folks, that we you really have to line up. Okay.
Yes.
So I'm gonna touch on. All right, so now I'm moving over to fractional. Okay, so all right, you've clearly outlined the infrastructure, the financial back office, the financial component of businesses. I don't listen. I don't want to hire 450 to $500,000 worth of people to do financial work in house.
Hmm.
I'm a younger company. I'm doing $5 million a year. I don't have $500,000 that I can bring on in payroll. Is there another option out there for me?
Yes, that is exactly what we do.
Okay, perfect. I teed you up there, Natalia.
Thank you. So that's the fractional CFO. So there's certain things that we're not going to do. We are going to look at everything, but this is more of building out all of the financial reports. So you have to have, obviously, the bookkeeping has to be on point, right?
Hmm.
Accurate, timely. That's why we do bookkeeping because we find so many that don't. So we have to have that to do the fractional CFO. Then what we do, it may be different what other CFO firms do, but what we do is we have our first meeting is a conversation. What are your challenges? Where do you want to go? What are your goals? We already know what metrics will change a lot of levers. And this is
Hmm.
why it's so complicated for most things because some levers need to go up, some need to go down, some need to be tweaked just a tiny bit, some need to be really changed dramatically. So we know most of the levers, but the conversation is really important because we don't know your business day to day. So we have the conversation, we build out all the reports, and every time we meet, and this is like we meet once a month, but obviously things are going to come up throughout the month, so we're there on basically on call.
Uh-huh.
So if someone needs something, they message. I've had people call me at Friday on at night and be like, "I'm getting sued. I don't know what to do."
Hmm.
And so that's not really my position as a CFO. However, my position is to support the CEO, and I feel like the fractional CFO or even the CFO is part strategist, part understanding all the metrics and the money that the strategist, part mindset and part therapy.
Hmm.
Because
Hmm.
our
Yeah.
job is to make sure you are moving forward in the right direction. And sometimes, and to refocus you. You're
Hmm.
constantly being pulled in so many directions as a CEO. This fractional forces you every single month to sit down and look at everything and make decisions and know. So this is where I'm at today, and this is what I need to do in the next couple of weeks to improve my situation. So it's next steps, and so it really focuses you in on what's going to be most impactful. And like it's like that domino that's going to knock over
Hmm.
the most other
Hmm.
dominoes. That big domino.
Yeah, that makes total sense. So when you look at construction companies,
Hmm.
and you get hired by a construction company, specifically construction company, you outlined, you have that initial call, you start rolling up your sleeves and start getting their sort of infrastructure in place. What are their goals? What are their challenges? What are kind of the three or four core things you see with construction companies that you work with that you say, okay, the CEO or whoever they have in-house wasn't really paying attention to this. We have to address this first. Or,
Yes.
this is in the first couple weeks.
So I love that question because there are certain things that we see over and over again. The great thing about a fractional CFO is that we start seeing patterns and we start seeing patterns of what works also. So the patterns that we see of what a lot of people do is the first one is what you had mentioned, profit does not equal cash. I have $500,000 in profit. I've got 50,000 in my bank account. I don't know where it went. So that is the number one question. Usually because it's something happening on the balance sheet, or maybe they're just taking, a lot of distributions and they don't really
Mhm.
realize that happens too. So old credit card
They don't
debt,
really realize they're taking distributions.
I've had that happen. This is all true
Interesting.
stories from
Interesting.
experience.
Really? No, it doesn't
Yes.
surprise me, but I'm just that's interesting. Okay.
They
Sorry.
didn't realize how much. So I had one that was taking $400,000 out.
Uh-huh.
And when I showed them, they're like, the light bulb went off. At first, they argued. They were like, no, we didn't
Yeah.
take that much money out. And
Yeah.
then the light bulb went out. And we're like, here it is in the
Yeah.
cash flow
That's a
statement.
use of cash, guys. That's a use of
Yes,
cash. Just like an increase in accounts receivable is a use of cash,
yes,
distributions is a use of cash.
yes. They were buying real estate, so they didn't consider it as a distribution.
Oh,
Um,
okay.
but that's what's happening, right? So a lot of people they're so busy with their day to day, they're not really thinking all of these things through. And this is not really in their wheelhouse. So it
Yeah.
makes sense. So the first thing is cash and profit. Like where is my cash?
Hmm.
The other thing is profitability, just in
Hmm.
general. And there are a couple of things that are going to happen with profitability. The first thing we look at, and the first thing that we normally see is an issue, is the labor to revenue percentage. So there's
Mm.
something there that isn't working, and it's usually they're either not charging enough or they don't have the right people in the right places that are productive and efficient. So when I see a labor to revenue ratio that doesn't make sense, I
Hmm.
know that something, it might be productivity, efficiency, like utilization rates. Are you charging appropriately?
Hmm.
It could be a lot of different things. That's why we have to talk those things through. I've
So
had,
Natalia, just real quick on that specific notion right there. So when you say labor to revenue, right? Like a
yes,
percentage, your labor accounts for a percentage of your revenue, which is eroding your margin. It's a part of your margin, right?
yes.
Direct costs, or maybe not direct costs, but you're probably talking direct labor here, I'm assuming.
Usually direct labor and then also indirect labor. So we look at it direct labor to revenue and then
Yeah.
total labor, everything to revenue. Also, we look at several different metrics.
Yeah, no, that makes sense. But let's just take direct labor. Let's just take one of those line items, right?
Mhm.
Which would be an income statement line item, folks. Do you all have like benchmarks that you set against to provide that counsel essentially?
We do. So we're looking at a gross profit. So direct labor and materials are going to be in your cost of goods sold.
Yep.
So we're
Yep.
looking at a minimum, and it does depend a little bit on the industry, at like what kind of construction. Is it, more like contractors? Is it more like full-on construction
Yeah.
installation? So it could vary, but we're looking for something that's close to 50 to 60% or even higher in some instances.
Okay.
Sometimes it goes a little bit lower. It depends on how much and what they're putting into their cost of goods sold. Um,
Yeah.
and so sometimes we'll just like we'll do a few little tweaks. But what we're finding is that's the first place. If your gross profit isn't supporting the rest of all of your operations,
Yeah.
that's the first place where you have to make decisions.
Yeah. No, 100%. And that goes into how are you pricing your work, right? So my
Yes,
question on that would be, let's just take labor, for example, because I feel like you're right. Like labor is really, really hard uh to reconcile, like absolutely to the penny correctly, because there's a lot of elements that go into that.
yes.
So from your experience, do these contractors price inappropriately, or is it more on the inefficient? It's inefficient labor.
It's a combination. I've even found where the owner is doing some of the work and not charging for it at all, or not
Okay.
charging appropriately,
Okay.
because they're like, I'm just jumping in and doing, fixing some things. Well,
Yeah.
that costs.
Yeah.
That's a cost. So don't do that. So I have found a combination of not charging for all of the work, feeling
Hmm.
bad. Oh, we had so many different things. This took longer than we anticipated. Uh,
Yeah.
it can only take longer than we anticipated once or twice, and then you need to fix that. And usually you fix that with you have to increase your pricing if
Yeah.
that's happening. You can't just constantly say, "Oh, it just took longer than we expected,"
Yeah.
or we ran into a problem. That's why you have change orders and you have that in your contract.
I mean,
Um,
that goes back to your trend analysis too. As a business
mhm.
owner, you need to look back. All right, what's my historical performance on these jobs? I either need to bake in and bake that obstacle into my pricing, uh, or sort of reevaluate how I'm executing my projects.
Yes,
Yeah.
exactly. The other thing is efficiency. People have a really, really hard time with managing people. It's it's a skill.
Yeah, no. It's like there's more books on leadership and management out there than there are probably on anything else. So yeah, you hit
Yes,
the nail on the head.
yes. I find that I've had people, and this is why I say that CFO is part therapy and mindset because we have to let people go. We sometimes we have
Hmm.
to. Uh, I have had to tell other owners, you need to get rid of this person. They're not a good fit. And
Hmm.
that's a really hard thing to do to terminate someone's employment. But it's really important for the company. If they're not a good fit, if they're not pulling their weight, they're bringing everybody else down. They're making you unprofitable. And you're showing the rest of the team and the entire company what you tolerate.
Hmm. No, and that's a huge component of leadership, Natalia. I mean, you have a lower performer, right? And you tolerate it, then you erode the trust with your other people because they're saying, okay, you're holding everybody to a standard, but you're being lenient on this person. What does that say
Yes,
about your standard, right?
yes.
And that therefore erodes your trust as a leader, 100%.
And there are different things. So there's two things to look at. Performance, do they have the skills?
Yeah.
And attitude or culture, are they a good fit and aligned with your company? Those are two different things to look at. And so if someone has the skills, but they're not aligned with your company, they also probably need to go. They're not going to last. Something's
Yeah.
going to fall apart. And if they are aligned with the company and the culture and they don't have the skills, you can skill them up. But that's going to be training and taking time. And so then you
Hmm.
need to actually put in a buffer also for your
Hmm.
pricing so you don't lose
Yeah.
tons of money while you're training people up. So
Yeah.
there's, like I would even look at it almost like a quadrant, right? And of course, obviously the person with, fewer skills and is not a good fit for the company also needs to go.
Yeah, no, yeah. I mean, the it's like that character and competence debate. That goes for leaders and that goes for employees. And there's that constant debate too. As a leader, you're always thinking, do I build or bail on this person? Does this person have the ability? Can I build them? And at what point do I bail? Anyway, we're kind of getting a little
Yeah.
off subject with so. All right, so you're not necessarily, I know there's some instances where you're not necessarily replacing a company's staff either, right? Your staff enhancement. I mean, your staff.
Yeah.
So in a scenario, I can envision that happening. What if I'm a contractor? I'm 30, $40 million in revenue. I've been around for 10 years, maybe 5 years, doesn't matter. And I decide I want to sell my company, which takes a lot of work, especially in the financial space. Could I come to you guys and say, hey, can you help me get all of my financials in order for the last few years and help sort of make this process a little easier?
Absolutely. We're not brokers.
Yep.
However, we do understand how companies are valued and
Yeah.
what the financials need to look like for sale. But that's different. Then you can't just pull out what you have in your QuickBooks when you're
Yeah.
selling. And I've seen bookkeepers and other financial people do that. That's incorrect, and that's going to devalue your company
Yeah.
because there are transparent and correct ways to do that. So yes, we do support companies. We actually support them if they're saying, hey, in 3 years I want to sell. That's actually the perfect time to hire
Perfect.
someone.
Yeah.
It
Get
gives
ahead
you
of the curve.
time. Get ahead of
Yeah.
it. You need to get ahead of it for tax reasons also,
Hmm.
because you're going to get slammed with taxes if you're not
Hmm.
prepared. And you need to get ahead of it because they're going to be looking under every rug and in every closet and every
Hmm.
corner of your financials. And if you are, there's certain metrics and levers, I guess, that make your company more valuable. So
Hmm.
we know what those are. So we can do evaluation, see
Hmm.
where we are today, and keep changing things and moving in the right direction, and then do evaluation in a year, see how have we improved.
Hmm.
So it's really important to do this in advance. But yes, that's something that we could definitely help with. And clean
Yeah.
financials are the basis. There's a lot of deals that have fallen through and will fall through if the financials aren't clean because you can't trust them.
And yeah, and I just want to make something clear for the viewers out there. So Natalia's firm will help you get ready to sell and do all the things that are necessary from a financial perspective to get ready to sell. But Natalia hit on a point that I think I need to create some clarity around. There are companies out there that are investment banks that will actually broker the sale of your company and
Mhm.
work with a firm like Natalia's to actually get you ready. And the reason the services that Zacharin Consulting does are so important as it relates to potentially selling your company is that whoever decides that they want to buy your company are going to submit something called a letter of intent. Right? That means they're interested in your company, and then they're going to go through a number of weeks or months long process of due diligence which encompasses Natalia's whole world as far as the financials go. So Natalia, I just wanted to make that clear for the viewers out there. Did I hit that pretty right?
Yes. Yes. And a lot of it, some of it we can't even answer because it's going to be day to day
Yeah.
type of questions, but we can support, like we'll have someone that comes to us, how should I answer this? This is what's happening. And how should I write this down or how should I answer it so I don't hurt myself too.
Hmm.
So we can help with that and support.
Awesome. Awesome. Well, Natalia, the last question I have for you is what question am I not asking?
What question are you not asking? I think you asked a lot of really good questions. I would say, and you hit upon like when should you hire?
Hmm.
Um, Maybe the question is why do people not hire CFOs or
Hmm.
good, great bookkeepers?
Hmm. Yeah.
That's
Great. Do you have the answer to that?
I have some answers. Yes,
Yeah.
I'm still. I love sales. I'm heavily involved in sales. I have a
Yeah.
sales team, but I still
Yeah.
do like referrals and stuff like that. It helps me pinpoint like the psychology and what's still going on out there and my
Hmm.
competition as well. So I believe that there is this, first of all, this underlying thinking that the financial services are data entry and they're not that professional and anybody can do it. And the problem with the industry is the industry itself created that issue by
Hmm.
undervaluing themselves and underpricing, and it's gotten worse because anyone with a computer can say they're an accountant. Anyone,
Hmm. Hmm.
anywhere in the world, and they do.
Hmm. Yeah.
So that's the problem number one. Problem number two is that no one's taking the time to oversee and having a second set of eyes to make sure. So a lot of times the business owner will hire someone, and then they don't actually know how to read their own financials, so they have no idea if they're doing a good
Yeah.
job.
Yeah. Yeah. On that note, just real quick, and this is something I did not touch on. Folks out there who are looking to get financing, you better have someone like Natalia's group on your side. If you don't understand your financials and your financials are not in order, and you cannot send me as a not me personally, but a bank, for example, 3 years of income statements, balance sheets, 3 years of tax returns, 6 months of bank statements, AR, AP aging. If you can't do that in 30 minutes, um, that it just shows you absolutely have to have someone like Natalia and her team to actually help you manage a lot of that, and just makes getting funds from a bank or an other non-bank lender so much easier. I mean, why make that harder on yourself than it necessarily has to be? Um, so I just wanted to make that point too. I didn't know we didn't hit on that.
Yeah. And I'd say the other thing is a lot of people don't want to take have the expense,
Yeah,
and they wait till they're like, I'm in trouble now. I don't really have the cash flow, so they wait until it's even worse.
yeah,
So
yeah.
don't wait till you have a problem. If they're like, I'm doing really well, that's the other thing is I'm doing really well. I don't really need the help. Well, I have my entire career of owning a business. I've always had my own coaches and my own people because as the owner, you're blindsided by what's going on. A lot of it is emotional decisions. It's not always data driven when you
Hmm.
own the company. And
Hmm.
so having someone as soon as possible, even if you're not having issues, is going to prevent having issues.
Hmm.
So the best place to start is now if you're not having any problems, and the best time to start, and the best time to start if you are having issues is now also.
Hmm. Hmm.
The longer you wait, the worse it gets.
No, you're exactly right. So, Natalia Zacharin, thank you so much for spending, 40 minutes with us. You're so informative. You're the value you firms like yourself and just generally the financial services sort of component of businesses is incredible. And you really outlines a lot of your points very clearly. And I hope you viewers out there got a little bit of a glean into the operations and the value that these positions and these partners can drive for you because it's real. And it's just, again, I say this on so many of the podcasts, it's just going to open up options. Knowledge provides you options. That's the reality. And Natalia Zacharin, Zacharin Consulting, all the way up from Baltimore, Maryland, works with companies nationally. Good friend of mobilization funding. Thank you.
Thank you so much. And I really appreciate that I had an opportunity to be here. And we have a few giveaways, some resources that are free for your audience. And I'm
Awesome.
sure you're going to put that in your notes. But we
Yep.
really appreciate being here. And I love that you are so passionate about finance also, because it's
Yeah.
the most important part.
Yep. That's right. That's right. So that's another episode of Mobilization Mindset. Thanks for listening. We'll see you next time.